Yo, what's the dealio, man? Listen, you already know I got a straight banger for you today. All right? So, in today's video, what I want to talk about is key levels to pay attention to in your trading. All right? If you are watching this, do me a favor and just be sure to like this video and also subscribe to the YouTube channel. I'm bringing you videos every single day to change your life, to invest, right? Finances, and also to trade, right? Investing in trading and finances, money, and self-help. All right. So in this video, we're going to talk about important levels to pay attention to for your trading. All right. I have 6, but we're going to go through the charts a little bit. All right. So the first level or levels to pay attention to are going to be your previous days highs and lows. Okay, previous days highs and lows. You always want to know, okay, if you got to think about it, right? If you beat yesterday's score, your score is going to be higher, right? So that's the same thing if we get above. So if I'm going to trade Google, if we get above yesterday's highs, we're going to go higher. If we can't get above it, we could reject and we could come lower, right? Same thing to the downside. If we get below yesterday's lows, we're going to go lower, right? So when I'm looking at the daily time frame or I'm day trading, I'm always looking at the previous day's highs and lows, okay? Next one. And these kind of all they play a factor, previous week's highs and lows, okay? If you see that we're on the previous week's highs and lows, if we break above the previous week's highs, we could go even crazier because that weekly level is strong, okay? Previous month's highs and lows, same thing. These are all levels, y'all, okay? And then the previous quarter's highs and lows. I want you to understand that the previous candle, because when I say candle, it could be the daily, it could be the weekly, it could be the monthly, it could be the quarterly. The previous candle's high or low. That's what I want you to pay attention on, okay? The previous candle's high or low. If we get above it, we get below it, we could take calls or we could take puts. It's going to go higher, it's going to go lower, all right? So those are levels right there. The next thing is pre-market levels, okay? So what if we gap up, right? What if we gap up and then, we're already above that level? Okay, pay attention to the pre-market levels, right? And we're going to go in the charts in a minute and I'm going to show you guys this stuff, but I wanted to break these things down and then I want to give you an illustration of what I'm talking about, okay? So pre-market levels. Make sure you're paying attention to those pre-market levels. And the last levels that I want you to pay attention to, this is what everybody misses out on, okay? I want you to pay attention to the gap levels. So it could be fair value gaps or it could be gap ups and gap downs. These are areas of liquidity that you will get tricked out on, okay? Make sure you pay attention to those levels. So now, let's go to one of my favorite places, the charts, okay? Let's go to the charts. And now, let's illustrate this so we can bring it all together and we can help you create some new neurological pathways that can help you make more money. All right? So, we're going to pull up these charts right here. And we're going to go in. All right, so right here, let's go to, so this is showing Meta. All right, we got IWM right here. All right. So the first one I said is yesterday's highs and lows. Okay, so let's go to the daily time frame on IWM. All right. So look at this right here. We could go back It doesn't matter if it's today, last week, whatever, right? So let's go back here. Let's go to a chart with no levels. Actually, let's go to GEV. All right, nice, clean, a much cleaner chart. All right, so let's say that I wanted to trade GEV. Okay, so now let's go to this little area right here. So you see we got a candle right here. So this is the day's high and the day's low. All right. So look at this. We got right here, right? This is the high of the day. Now, as you can see, the next day it came down, it opened up here, it came down, and it pushed up. So once it came down and it came back up and it got above this level, you enter in the calls and then you go higher, right? Look at the next day, right here. Did the same thing. Came down and it pushed up and it went higher, right? Look at this. This is the low of the previous day right here. It came lower, right? Once it got below the low of the day, it came lower, right? This day right here, once it got above the high right here, right? What did it do? It pushed up, right? Look at this one. This candle barely got above, right? And then this candle was a 3-bar, came up, rejected, and it came down, okay? So you want to make sure you're paying attention to the previous day's highs and lows. Now, same thing with the weeks, right? Look at the weekly, okay? So let's go to this candle right here. So for this current week, GEV did not get above the previous week's high, right? So it opened here, didn't get above, so it's coming down. It came down, right? It came all the way down here to 532 from 594, right? So it didn't get above. Now let's look at on the weekly. So on the weekly, we're in a range right here. So you want to go to the daily to kind of see, but if we break above a certain level on the weekly time frame, then we could go higher, right? So let's go to the monthly. All right. As you can see, this is a pretty volatile stock right here, right? It goes up and down a lot. But last month, it was at 655. It got above 655 and it did end up going to 664, right? That's the month's high, right? But then it rejected. Okay. So you want to make sure you're paying attention to your monthly levels, quarterly levels, and what I mean is a closure above these levels as well. Okay. We need to get closures above these levels. So if I'm looking at, let's say you're on the 30-minute time frame, if we close above that level, if we close above that monthly level on the hourly or the 30-minute time frame, it could have an explosive move. Okay? So those are the previous levels, the daily, the previous day's levels, the previous week's levels, the previous month's levels, right? Now let's go to pre-market levels. All right, let's go to Starbucks. Okay? So let's look at it. So right now, so let's say I wanted to trade Starbucks this session, right? So as I can see, their high is right here from the previous day. Okay, so they closed right here. They closed right here on the previous day at 85.41. Okay. 85.41 is where they closed at. Now they gapped up and they came to right here. They opened up at 86.09, right? 86.09. Right, so this is a gap, but we have pre-market levels right here. So usually we would say if it gets above 86.09 in pre-market, then you could take a call. But look, it didn't close above this level it just went all the way to 86.79 and then it rejected and it came down. This is on a 30-minute time frame. On the 15-minute time frame, it closed above it and then it came right back down, right? And then we came lower and then we got a closure above it here, and then we went up. So pre-market levels will let you know a lot of good information, all right? So you always want to make sure where pre-market level's at, right? Let's say we want to go trade QCOM, let's just say, all right? So same thing. We never got above pre-market highs, and look what happened. We came all the way down, right? So you want to use pre-market levels as a level as well. So if we have a 3-bar right here off of a rejection on pre-market levels, then we coming down, and look what happened. Came all the way down, right? Let's go to MMM. Pre-market level is here. We rejected off that level, and now we coming down. You see what I'm saying? So pay attention to pre-market levels, all right? And then the next thing that I said is gaps, right? You got fair value gaps and you got gap ups and gap downs. So why did this stock come down? Well, it closed right here the previous day, all right? And then it opened right here, okay? So we got a gap there. So it filled the gap and then it came down. If we go to the daily time frame, let's just see. On the daily, we've just had a crazy run up, right? On the daily time frame. Is these all-time highs right here? No, they're not all-time highs, but it's rejecting off of this area right here, right? But we've had a crazy run up the past couple days, so it's time for a pullback, and now look what's happening. It rejected there, now it's coming down, right? So if you go to pre-market levels, and then we go to the gap, so it filled a gap here, but now it's coming lower, right? Let's go look at some stocks that I'm trading. Let's look at HIMS. Okay, look what's happening. So they closed yesterday at 48.48, right? So they closed in this area right here, right? Okay, and they opened up right here. So they opened up right here, all right? So this area is a gap. So if we could close below the bottom of the day, then we could come lower, all right? This is actually the low of the day, but I would say if we could close below these candles right here, we could get into puts and we could come down all the way down to this area 48.51, because this is a gap that has to be filled, right? So that is another like area of interest or level to pay attention to, right? So when it comes to a gap, you can come in the gap and bounce and go higher or go lower, or you could come down and then keep going, or go up and keep going, right? So we filled the gap here, and now look what happened. Well, we didn't fill the gap. It's looking like we're trying to, so maybe later on today, we could come down and we could fill this gap. Okay, let's go to gold. See where they're at. 380, right? So let's look at the daily time frame, right? So look at this. This is an area. So gold had came down. They have a gap up here to fill, right? So this is an area you want to pay attention to. Then they came down here. Now they came down from here, okay, from here, and then they gapped down all the way to here, okay. The other day, this was on Wednesday the 22nd of October. So if you go to the 15-minute, look what happened, right? From here, they closed here, they gapped down here, they came down, and then they filled this gap, right? So if you see a stock come down, then you know that, okay, if I see a gap, I'm going to anticipate it going up to fill that gap if I see bullish candlesticks on that chart, all right? and then it's coming up. Now, if you look at the daily, it looks like it wants to come up and fill this gap here, right? Looks like it wants to fill this gap here. Now that it came up, it came down, and now it's pushing right back up. Now it's looking like we're going to try to come back up here. All right, so these are gaps. And then you want to look at fair value gaps, right? Fair value gaps are an area that the stock can come down to or go back up to. And it's either going to reject or bounce or break through. So let's look at this area right here. Fair value gap is a 3-candle sequence, right? So look, we have a fair value gap right in this area, right? We have a big candle right here. And then look what happened. It created a gap. Where's the gap at? It's this green box right here. It's the top of this first candle right here, the top wick of this first candle. And it's the bottom wick of this candle right here. Okay. Boom. And now you can see the stock came down and it started to bounce here and it went all the way up here. So these are areas that you want to pay attention to when you're trading stocks. All right. You want to look at fair value gaps because these are areas of liquidity because this area did not get tested yet. Right. Came and got tested and it bounced up. Right. So if you got to move from here from 171 all the way up to 174, you could change your life with that move right there. All right. So those are levels that you want to pay attention to. All right. Previous days, highs and lows, previous weeks, previous months, previous quarters, highs and lows. Also the high of day when you're trading intraday and the low of day when you're trading intraday as well. Right. You want to pay attention to those also. Right. And then we got the gaps and we got fair value gaps as well. All right. So I hope that this video was helpful to you. And I hope that it made sense. And I hope that this really helped elevate your game and elevate your trading. All right. So like I always say, make sure you get up out your head and go get into this world because your head is a dangerous place to live. All right. And also remember, y'all, the more you study, the less you worry. All right. I appreciate y'all time, man. I'm going to holler at you guys on tomorrow's video. Y'all stay smooth, man. Peace.